Monday, July 11th, 2022, Monaco 64, home of alternative economics and contrarian views. So you might be wondering what happened to the live stream last night, Sunday night live stream. Well, I was planning to do it, but my wife and I were traveling to Italy. There are some problems with the flights. They were delayed. When we got to the airport in Milan, there was some delays as well. And eventually we got here to Lake Garda region in northern Italy. It was too late. And what are we doing here? Well, we were invited by one of the followers of the channel, who's based in Rome, Italy. He's English, but he's a journalist, and he covers the Vatican and the Church, the Roman Catholic Church. And I've been in contact with him for quite a few years on Twitter, and yes, he's invited me for a few other things, and I couldn't make it. So they conduct here every year, except for the last couple of years because of COVID, the annual Roman Forum Summer Symposium, and he wanted me to be here this week because they're talking about the church and the Great Reset. Some of you might think about the Roman Catholic Church and think of the Pope and the Vatican, but even within the church there's a lot of divisions. And so today, for example, Monday, we have Dr. Rudolf Hilfer who's going to be speaking. This is a symposium, of course, and he's going to be speaking about time, eternity, Isaiah, and the Great Reset. Yes, the Great Reset. Davos, World Economic Forum. And guess who's here as well? Michael Matt of the Remnant TV. Professor Peter McCullough was supposed to be here. He couldn't make it, unfortunately, but his speech to the conference is going to be given. Yes, so that's going to be very interesting. So here's the schedule. As you can see, very nice place here. Big Lake Garda. Hotel is very nice. I'm gonna go for breakfast soon. I'm quite early. It's what time is it? It's 7:10 in the morning. European time. London time is 6:10, so I'm up quite early. What else is there to say? No, we're gonna be here to the 14th of July, Thursday morning. We're gonna drive back to Milan and fly back to London in the afternoon on Thursday, the 14th. So I will be doing my videos here. It's really nice. I think it's still pretty quiet. People are still asleep, and I'm outside in the balcony, and my wife is inside. So if you haven't seen it yet, I published a video yesterday, an interview I did on Friday with Jim Lewis of Wall Street Silver. I recommend you watch that. It's a good interview, I think. So what I want to do now is talk about an article that came out last week in a website called reaction.life. And it's by a former bullion dealer, someone from a very traditional banking family in the city of London, Peter Hambro. And in it, he talks about the Ponzi scheme that is not just comex gold, but also the LBMA gold, in which he was a dealer. He was a bullion dealer for, I think, Scotia Makata, which was one of the, up until recently, they were very big in the LBMA. And just goes to show that once this paper game that sets the price of gold and silver right now, once that unravels, I don't think anyone will really knows what the real value of gold and silver is. And I use the word value because price doesn't even really define what I think will happen. And then we'll quickly look at where the markets are this morning. So don't forget the golden rule. Whoever has the gold makes the rules. That's what Peter Hambro entitles his article. So let's quickly go through it. He says, straws blowing in the wind are often said to presage great tempests, and I believe that this chart shows just such a straw. So this is a chart that I've seen before a few weeks ago in the Office of Controller of the Currency. They publish quarterly reports on derivatives positions of the big banks in the U.S. Office of Controller of the Currency, of course, regulates or keeps track of what the banks do. So here they've got a notional amount of precious metals derivatives at insured U.S. commercial banks and savings association. So you can see how the hockey stick formation. And someone noted, I think last week, because most of this is held by JP Morgan and Citibank, and they said if JP Morgan and Citibank's position went up so much, how come Bank of America's position didn't go up? And what they're trying to imply here is that this is not just like a regulatory change of how to calculate the derivatives. This is real here. This is really gone up. And this is probably why they've been able to keep the price suppressed, right? So let's go through the article here. You do not need to take my word for it. After all, the straw is being pointed out by the United States Controller of the Currency. That's what Peter Hambro says. Disinformation for many years has kept the lid on this tinderbox. And since 2018, the financial stability desks at the world's central banks have followed the Bank of International Settlements' instruction to hide the perception of inflation by rigging the gold market. Of course, they cannot be seen to do this, and they need cover. The only way to achieve cover is by smashing the price of physical gold by the alchemical production of paper gold. With the help of the futures markets and the connivance of the alchemists, the bullion traders, yes, that includes me. Well, he's not a trader anymore, but he used to be. I was deputy managing director of Mokata and Goldsmith. Managed to create an unshakable perception that ounces of credited gold to an account with a bank or bullion dealer were the same as the real thing. And much easier, old chap. You don't have to store or insure it. That's what they used to say to the clients. Once investors swallowed this stupefying pill, it was easy to sell them gold that simply didn't exist. Of course, there were wary investors who found it hard to believe that the likes of Mokata, Montague, Rothschild, and Sharps-Pixley were undoubted counterparties and wanted to be assured that the gold would be there when they called for it. Easy, we said. Don't bother to pay for it. Just give us an initial cash margin and agree to a variation margin, and our paper promise is as good as gold. Margin game, right? To entice you instead of paying for everything. This was the simple derivative. If you thought the price would go down, you could sell as gold. You didn't have and margin the trade in the same way. Then along came a raft of options and other products, and the derivative market. For that is what this chimera was called. Started to spiral like a tornado to make the bogus gold look even safer. The Bank of England was quietly willing to lend the London gold market members physical gold. Lend, right? In the event that things got a bit tricky and our vaults were empty. When one of the members went bust, the others clubbed together, and with the Bank of England holding the ropes, the customers were bailed out, but I didn't get a bonus that year. So why is the Bank of England involved? Well, because keeping the price of gold suppressed is important for the central banks because it makes their paper look worth a lot more. And this pseudo-confidence suited the brilliant theoretical economists, Keynesians. We, the government, we, the central bank, we, the BIS, can print the margin. That is what fiat currency is, not unlike Bitcoin and easier to mine. Derivatives are unmargined and thus have no limit and may not even be on the balance sheet, off balance sheet. The great banks of Wall Street will accept our fiat dollars as margin and manufacture gold to swamp the market. Gentle folk, look at this chart and then go see your bullion trading counterparty and buy some gold. And I think he means real gold. Then ask for your gold or silver or platinum or palladium or any other physical store of value and medium of exchange that you have acquired to protect you from the ravages of inflation. For inflation will surely engulf the world when the paper gold emperor's clothes are seen for what they really are. Vladimir Putin and Xi Jinping are among those who know the golden rule. Whoever has the gold makes the rules. So this is what it says here. The author has worked in the gold business for more than 40 years, both as a trader and investor. He co-founded and was chairman of Petropavlovsk. It used to be Hambro Gold, Peter Hambro Gold. I used to have shares in that company, and then it was bought out and renamed Petropavlovsk PLC. It was listed in London, but operations were in Eastern Russia, gold mining company, until it was taken over by Russians, and now is chairman of and a major shareholder in XAU Resources Inc., precious metals exploration company with assets in Guyana and shares listed on the Toronto Venture Exchange. So we're going to stop at that. So this is a guy on the inside, not just in the bullion market, but also in the makeup of the city of London. The Hambro family goes back a couple of centuries, I think, in the history of the city of London. So with that, I'm going to look at where the markets are this morning. As I said, it's quite early. It's 7:20 European time, which is actually 1:20 a.m. Eastern time. So we've got spot gold virtually unchanged at 1742. High's been 45, low 38. Silver's down 3 cents at 1928. High's been 38, low 18. The Dow futures down 150. NASDAQ 117, lower. And the S&P is down 25 points. We'll quickly move to the currencies. We won't look at every currency today. We just look at the main currencies and the ruble. Sterling is down a third, almost actually down 0.4, 119.87. The euro is down 36 at 101.49. Dollar is up almost 0.75% versus the yen. So the yen continues to crash, I guess. It's at 137.02. Dollar Swiss is slightly higher, 97.84, and the dollar is up a third versus the yuan. Check the ruble. Well, the dollar's down almost 3% at 61.11 versus the ruble. And back to the general commodities now. WTI crude is down just over 1%, 101.43. Brent is down 1% at 104.80. High-grade copper down 2% at 3.45. U.S. nat gas up 5% at 6.31. I think there was an explosion of natural gas plant or some kind of facility in the U.S. So that's probably affecting the price here. And we're going to finish off with the 10-year yield, 10-year treasury yield. Where are we? It's down about a basis point at 309. Let me see if I can see where the probably not changed the Japanese 10-year yield. They still got control of that market. Yeah, the 10-year yield in Japan is just below 25 basis points, which is the cap. But I always see it up here at 25, which means that yields really want to go higher. Because if they wanted to go lower, they'd be at 20 or 15 basis points. So there you go. I apologize for the absence of the live stream last night. Yeah, circumstances were not really helpful to doing a live stream. I expected to get here around 7:30 local time, 8 o'clock, but we got here at 10. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. Yes, and I wish you all a great day. Take care. Bye.